Hey guys, Brandon Boyd here. I'm married, I've got 6 kids, I've got over 21 years doing online marketing and 5 years as a currency trader. And now with our rapidly changing world, it is absolutely the best time ever to look at options, financial options, to protect you and your family's future. So we have an incredibly special offer for you. And before we get into that, I want to explain exactly how you can become financially free. So what I want to do is I want to spend just a few minutes just to introduce you to the foreign exchange market, which is the largest financial market in the world. So we've partnered with an online education company called I Am Mastery Academy, who has been in business for over 7 years, has over 250,000 customers, over 100 countries, 12 languages, and one of the fastest growing companies worldwide with over 100 plus educators that you can follow, copy and paste their trades successfully. We also have a number of services to choose from, but we recommend HFX, which we believe is the simplest and fastest way to learn and earn at the same time. Best yet, we also have a way for you to get access to it for free as well once you're a member of the Academy. The income, guys, the potential here is endless. If you're interested, we will show you exactly how as well. Okay, so here's the bonus that we talked about. I want to introduce you to Dr. Lee, who left the medical field to become a full-time trader. Yes, that's right, a doctor turned full-time trader.
Look at that drop. Can you believe that? The Dow drops from 30,000 points to 18,000 points. Well, sure would have been nice to catch that. In fact, if you were in a buy at that time, your account probably got destroyed and you didn't even know why. But did you know that the market gives us a clue? Anytime it makes a move like that, it actually shows us in advance what it's about to do. And I'm going to show you today how that is possible through a concept called divergence. Now, this is often taught out in the trading community, but I can tell you, I've watched hundreds of videos on it, and I can tell you that most people do not understand how to apply it correctly. They can see the basic divergence, but they don't know when to get in the trade. And so I've developed a strategy that I teach my trading community of thousands of students every single day for free on how to actually do that. And I'm going to show you right now how you can replicate this same strategy. Okay, so on this particular move here with the Dow Jones, it dropped literally from 30,000 almost to 18,000 points, one of the largest drops in financial history. So how would we have known that this was about to happen? Well, you need to understand divergence first. In order to understand divergence, you have to understand that it is a combination of price movement, of the normal up and down wave patterns in the market, okay, combined with a technical indicator. And what divergence is when we see a consistent line between a price movement, but an inconsistent or a discrepancy move between the technical indicator. So these two lines are no longer in parallel, they are diverging, okay? So when we look at the RSI down here, we're going to look for this divergent pattern to not coincide with the price patterning, okay? So if we look up here, price came up, got rejected down, came back up to that same level to retest. What do we see in the RSI? Well, on the first peak, if we draw a vertical line here on both of these so that you can see this, on the first peak, we see that the RSI reading was very high. This indicates on the RSI that price is moving very strongly in the upward direction. Now, some people use this as an overbought or oversold. I do not. I don't endorse that. It gives a lot of false signals. But for this, I want you to just simply pay attention to the fact that the RSI reading was very high. Now, on the second peak, you'll note that even though the price is at the same exact point as before, RSI reading is significantly reduced, okay? So if we were to draw a line between these 2 points, we have a downward line, and yet we have a flat line in the price. This gave us a clue that at this very moment, this is the earliest and first sign that price was about to change directions through simple divergence. Now, this isn't just in this one example, okay? I didn't handpick this example. This happens over and over and over again. And so let me show you a few more examples in history. Okay, if we go back on the Dow, we can see from its beginning back in the 70s The Dow mostly has just kind of gradually gone upward. And then at a few points, we have some major pivots. Here, okay, price came up, pivoted down, and then went up. Okay, so at each of these key pivot points, we had divergent signs. There's two types of divergence that I focus on. One is called a double top divergence, where we have an equal price retest of 2 points, and then the divergence in the technical indicators such as the RSI. There's also what's called a triple top divergence. Some people refer to this as a head and shoulders, but we apply it in a very different fashion than they do with the head and shoulders traditional strategy, and I'll show you that right now. So at each of these points, we happen to have a triple top divergence where we're seeing 3 sequential peaks with each RSI reading going in a downward direction. So let's zoom in and give you a closer look as to how that actually plays out. All right, this first one that happened back in 1999 to 2000, generally in that range. We can zoom in here. You'll note that price had been coming up for a long time, and mostly these price peaks continue to follow in sequence with their corresponding RSI peaks. But we began to receive a sign from the market that the market was giving us in advance that it was about to change, that this uptrend was about to turn into a significant downtrend that would go from a price of 12,000 points here well down, almost cutting it in half down to about 6,000 points. So what we see here is price came up, got rejected down, came up again to a higher middle peak, got rejected again, and then came up for the third peak before continuing downward. And what do we see in the corresponding RSI readings? The first one, very high. Second one, reduced. Okay, we've got a higher middle peak, yet we have a reduction in the RSI. That is the divergence that we're looking for. If we draw a line between these peaks, we have an up movement in the price, but a downward movement in the RSI reading. That is the divergence we're looking for. Now, where is our entry point? When do we actually get in? This is where my strategy differs from what most people think. Oftentimes it is taught, if you have a head and shoulders like pattern similar to this, that you're going to get in down below this overall, some of these lower pivot points. That is not how we get in. I'm teaching you exactly how to get in at this moment, which is essentially the last and final moment before the major downward trend move in this case. And that is right at this point. When the RSI hits that 60%, we have 3 sequential RSI peaks that are going in a downward direction, indicating that it is divergent with the price patterning. That indicates that we are now in that downtrend. We would put in our sell at this point, or a put option if you're doing binary options, and we would ride that downward. We see the same thing on the next pivot. So price came down all the way to about 7,000 points, dropped significantly. Why was it about to turn again? Price came down, got rejected up, came down again to a new low. But what do we see in the RSI reading? A reduction, or in this case, because it's on the downward side, the RSI number is actually going up because that strength in the downward direction is decreasing, okay? And then price gets rejected again, comes back down for that third peak. Note that the middle peak is always longer than the other two. And what do we have on the third RSI peak? Right there by 40%. So if you have a downward triple bottom divergent setup, you want the third peak to be right at 40%. If you have a triple top, as in this example, you want that third peak RSI reading to be right at 60%, and that is your entry point. So we would enter in our buy or a call option at that point and watch the market respond and go up. Let's look at again. Market continued to rally here significantly. Went from 7,000 all the way up to 14,000 points. Okay? It does it again. We have a nice, beautiful triple top right at the very peak of the market. There's our nice triple top. And what do we see in the RSI reading? High RSI reading on the first, lower RSI reading on the second peak, and a lower still RSI reading. As long as it's below 60% on that third peak, you're good to go. Nice divergence, reduction in the RSI, perfect triple top pattern. It repeats over and over and over again. Now, if you're in a buy already and you see this pattern, that's the time to also get out of the market. You don't want to hold on to that trade any longer, right? But your entry point would be right there as this price comes up to that point. You see the RSI close to 60% and you ride it on your way down. Now, does it continue? Okay. Price moved significantly, dropped from 14,000 points all the way down to about 6,500. These are massive, massive financial market moves. And what do we get once again? Again, these are all the biggest moves in market history, and we're getting the same exact pattern over and over again. Have you ever wondered why that is? This is what the banks are seeing in order to predict these large financial market moves. And you can use these same patterns to actually predict the market on a minute-to-minute basis, and I'll show you a few examples of that. So as price came down from 14,000 down to about 6,500, what did we see? Price moved down strongly, got rejected back up. What's our RSI reading? Well below 40% because we're on a downward triple bottom. Okay. As price moved back down and created a new low, all right, because we always want a longer middle peak on a triple divergent setup with a lower RSI reading. Okay, I say lower, I mean it's decreasing between here and there. It's actually going up in this case. Okay, and so as the price comes up and gets rejected again, once again we're looking for that entry right around 40% or above in the case of a triple bottom divergence setup, or 60% and below in the case of a triple top divergence. And what do we get? The market begins to continue to move up. Went from that significant downtrend to now a significant uptrend. Let's reset this just so you can see that whole move. So basically price went from 6,500 to all the way up to this point where it pivoted again after hitting 18,600 points. Huge financial move, and there were no more signs that it was going to change at that point. Okay, so we get that same triple top pattern. Now I'm going to jump right here to illustrate how on the second, or on this most recent drop in the Dow, where we get this huge drop, we have a nice double top divergence setup. We also had a nice double top or double bottom divergence setup right here before it made the move up to that direction. And let's show you in greater detail at that point. All right, so you can see the price had gone up, pivoted down, and before it went up though, it showed us what it was going to do. So what do we see? Price came down, significant rejection. There's some sort of resistance there. So we want to make note of that. We want to say, is price going to get rejected off that again? And how do we know? We cannot see by price alone. There are candlestick patterns or maybe other strategies you could use, but this divergence is a very simple one. So as price comes back down to that same exact level, we can see between the RSI we have some nice market divergence. A lower RSI here with an increasing RSI up to the 40% level, and where do we get our move? It never returns. Okay, these are enormous and powerful concepts that you can use every day to predict the markets. Now we see these again at every single major market move. Here's another one. This was a significant pivot. It hit a new high of about 26,500 points here. When price came up again to this point, we see that the RSI dropped again. Okay, so every time this happens, we're going to get some kind of a reversal move. Okay, and oftentimes on these high time frame charts, we're looking for major market trend changes. All right, so we have these massive moves, drop from 26, almost 27,000, all the way down to 21,500, a market move of over 50,000 pips. Okay. And we saw that same pattern as you saw up there. Now, we'll clean up our chart a little bit, reset things. Now, I want to show you how you can use these same simple patterns to predict the markets on a very small time frame basis. Because maybe you're not a swing trader. Maybe you're not holding on to trades for weeks or months or even years. And you're saying, I want to day trade. I want to do binary options and do 3-minute trades or 5-minute trades. Well, let's take a look all the way down to the 1-minute chart and see what we see. Okay, now this is today's chart. I haven't looked at any specific setups. In fact, this just literally happened. Okay, we have another triple top right now. Let's show you how this works. Price is coming up. It gets rejected. We form a new high, okay, because the middle peak is always longer than the other two. What do we see on the RSI reading? The first peak is high. The second peak is lower than the first one. So we have divergence there already. Even though price is going up, the RSI reading is going down. Price gets rejected again, bounces back up. What do we see? Right close to that 60%. That's our entry point. Boom, the market goes down. This is live. You can see the candles moving. I'm not making this up. Guys, this happens over and over and over again. I actually see another triple bottom right here. It's a small one, but it is a triple bottom. Check this out. As price came down, got rejected, what do we see on the RSI reading? Very low. Comes down, forms a new low. Note that. Again, we have a longer middle peak, comes up, breaks down again. What do we see on that third peak? Close to 40%. That's our entry point. We're looking for a call option or for a buy in normal Forex terms, and price goes up. We move into a nice uptrend. All right, so let's look for other opportunities. Let's look for more examples of this. Guys, this happens over and over and over again, and you can win in the markets. Now, how can you better learn this? We have a trading group that we started about 5 years ago. We now have well over 7,000 people in the group. We teach them on a daily basis how to do all of these concepts, how to apply them. We go into great detail. We show example after example after example, and we teach other concepts as well. We recognize that each trader has their own style of trading, and so we want you to win. So tell you what, get back with the person who shared this video with you, get connected, and come into our trading group. You can join for free and learn about what we are doing. I promise you that if you do, you can learn these powerful concepts, and losing doesn't have to be your future. You can join the 3%. You can join the banks who win consistently over 97% of the time. I can't guarantee you a specific amount of money. I can't guarantee you that you'll win as an exact percentage, but I can promise you that you'll increase your win rate and you can find success trading the markets. I do this every day for a living, and you can join the thousands of others who have joined us as well to apply these same patterns and to win.
Do you see an opportunity for yourself? Are you teachable? If so, one of our professional partners will help you fast to start now. So number one, enroll. Number two, plug into our proven system. And number three, you want to execute. And so what I want you to do is ask yourself, where were you 5 years ago? Has your financial situation improved? What if you keep doing the same things that you've been doing? Think about that. Ask yourself, is that good enough? So I want you to go ahead, send us a private message right now to get started today, and we'll see you on the other side of success.